reason why I always do my first zero DTE date around 10 o'clock or a little bit after is because I don't trust zero DTE prior to that. I mean, there's a lot of like activity and movement and stuff like that um, prior to like right when the market opens. There's a lot of like option activity and up to 10 o'clock. I'm kind of like I don't even know which way is up right now. So that's why I do that. But I'll look at it from now, kind of like a pre-market.
So what are you looking
at?
I'm
just looking at overall Vanna right now.
Yeah, I was gonna say. So
I'm looking at all expiration Vanna, and I'm just kind of looking that now. A lot of times I do this toward the end of the day prior, but there is a lot of positive Vanna out there, and even like here at 4,300, there's a lot that for being so close to the market, there's a lot there. I mean, and obviously a ton of these calls and stuff like that. This is pretty strong, but normally that's the case when you have. So wait, when I share my screen, does anybody see my screen, or are you just seeing Volland?
We see Volland. We see. You have to click on different tabs if you want to. Look at something else, but we see Volland.
All right. Well, right now, my historical volatility. I mean, I'm just looking now at what should we call it the R-ball and CBOE. The historical volatility is at 0.154, and implied volatility VIX is 14.94. So right now VIX is below historical volatility. So this is actually with this Vanna profile, it is not exciting. You kind of want to see an over VIX drop. Let's see what aggregate Vanna though is very high. So you're looking at like 30 million or 30 billion. Sorry, $30 billion. Okay, it's all messy. It's only 932. Looks like a lot of people selling calls up here at 4410. I mean, that far out of the money, this is probably those opening vol sellers, like Lex. Lex from yesterday, they're selling this 44, and they're just 4,400. Sale of 43.35, so they get a little bull here. We'll see where it comes out to. You look over here. Oh, it's actually kind of high for 930. This y-axis at 100 million.
Hey Jason, can you toggle to?
Yeah.
I was gonna say, can you go to like 930 historical volatility or historical charm for maybe another Friday and see like how it compares? Maybe like last month this time. I don't know.
Oh, I see what you're saying.
Yeah, because you're looking at the y-axis like, oh, this is a big number. So but that's something that you would only know historically, correct?
Yeah. So charm, even all expiration doesn't really matter, but you see, it looks real big, but it's this really really big one only reaches 100K. So when we're looking at and the aggregate, ignore this data point, but the aggregate you're looking at 139. That's actually really bullish day. This was what, Wednesday starting off. Yeah, Wednesday was a bullish day. So you hit the Y button. A lot more going to 150 million. See, like we're looking at like 300 million here. So this is a lot for opening. But a lot of times on Fridays, I think you'll see a lot more for opening because you have the existing positions in there, and you have like all those week, the weekly positions. That's still a lot of, there's still a lot of, traders and stuff getting used to the fact that they could actually trade, Monday through Friday.
So a lot of people have their own
Yeah,
process.
like,
Go ahead.
no, I was about to say, so when I'm doing like a zero DTE alert and I say like light volume or there's a lot of volume, I'll be looking either here or at trade alert. And see, like right now, where the y-axis is only 20 million, 40 million, 60 million, which is normal, to be honest. When I hit live, I'm looking at, 50, 100 to 150 million. So it's a lot more than normal. So we kind of, I guess, pre-market, we're starting off a little bit stronger than normal. Oh, there's that update. Everybody on the site is almost on the updates, right? What I read. Everybody's sitting there. Oh, fuck. But yeah, it's still update. Yeah, so I mean, I'm not going to sit here and like go through Volland everywhere. Let's take a look at that. One big sold, is that sold call or is that somebody put on a put position? It's a put position. That will fall in a lot recently. I'm noticing that the pre-market rally is being faded. Interesting. Let's see when the call was. This when that was put on. Not for any time soon. Usually something like that is going here and what? There it is. January 200 bucks. I wonder when that was put on. I could do a search and trade alert, I guess, for historical Apple trades, but the that's very interesting. So that means I guess somebody put on, that happens pretty frequently where somebody puts on like a trade for a quarter. When we had the white paper data, we have it actually 2018 through 2022, but I took out 2017 because all those trades are building up. And like you do the first day on 2017, you're ignoring any trade that was put on prior to that first day. So kind of have to let that data build up. We have to let that data build up on the new tickers to yes, one of our new tickers. Calculator, right? You see if like price is actually zero, you wouldn't see how, or the calculated price is actually zero, you wouldn't see like all the varied things like this. This wouldn't even exist. 175 counted as zero. But anyway, it's like that sold call. probably be covering ETFs short position soon. The thesis is pretty much played out. So, look at the cues. $100 million in one shot for Qs. Now remember too, Qs are, basically a tenth of the NQ, which is, 330 versus 4350 or whatever for SPX. Quite a bit. But somebody's hedging. Somebody is hedging. If you're a bull, this is what you want to see. You want to see people hedging, adding puts down here. And that's what will people are adding puts. Let's probably pressure up to the upside. So 941. Check out. Pick up the chart because I know everybody wants that. Yeah, all right. Now we all know that there's going to be more trades put on today, right? But here's the thing: this 4410 and 4400, they are going to decay pretty fast. I mean, this is this is far out of the money. This is the late price for what's the current price now? Like 43.67. So this will be a little bit higher. It'd be like up here. I mean, it's still messy, but this is going to fade pretty fast, and this is kind of counteracting it. So right now, we're kind of looking at balance. Gotta be careful because if this goes away real fast, it's going to look anti-jips because that's what's closest to the price. So that's what I'm thinking. Like now, again, it's 942. I'm not I wouldn't put on a trade based on this chart. I know some of you like to think that this early time will produce fruit, but I'm skeptical. But we're doing data, trying to find the data. So one of the things is part of the white paper is we're doing a study to determine what time is the highest success rate for zero failure. You're going to see what the success rate is, and the arch determines success rate. We're going to put those statistics. So we'll be able to see, and by half hour too, we'll be able to see what time the paradigms actually start becoming effective. But still, I'm skeptical that like something like 945 would be effective. But that's just all right. 15 seconds to the next update. We'll see if anything shapes up. Everybody's kind of waiting with bated breath for the first one. 15 minutes from now, I'm still like personally when I'm doing these, I still haven't looked at CRDT chart. Really changed. It's actually probably bad. It means like this is the beginning. That basically this is all the customers putting on their positions. So then we just have to wait for dealers to rebalance and like aggregates of kind of it's actually kind of balance. All this mess right here kind of says right now it's a little messy. 945 is. Let's see if anybody. I see a bunch of people in chat. Let's see if there's any questions. Okay. Someone didn't mute. Muted now. I could try some of these 10 minutes old, 10-minute old questions. So Vanna, you look at all expiration, while Charm, you look at zero DTE. So I'm looking at two different things when I'm looking at all expiration Vanna. I tend to swing trade. So, I mean, mainly because most of the time I have like meetings and stuff during the day. Today, I guess, is Veterans Day, so I only have like one meeting and one personal errand that doesn't involve Parsi. Well, I guess it sort of involves Parsi, but the but when I'm looking at Vanna all expiration, I'm looking at what the high level applied volatility, like kind of, I guess you could say, like structure looks like. Typically when when you have very high Vanna aggregate, like we do now, like in the 30 billion area, implies or basically the real volatility, the realized volatility is suppressed. That's kind of typically the pattern. And the other thing too is Charm at that time is usually going to push up. So if it's very high, so you're probably going to get like, normally you get like this slow crawl up. But when you have implied volatility below historical volatility, or really, for all intents and purposes, implied volatility just south of 15 is really, really low, considering how much we've moved over the past like 2-3 weeks. The daily moves have been pretty strong. So really, implied volatility is pretty low, considering. Now, one of the things I've been saying a bit in subscriber room is, I know a lot of people in the sub room think that they're kind of like bullish, and it's not out of the ordinary. It's not like uncommon to be bullish with this high of Vanna, but what you really need is historical volatility to come down, and then implied volatility to come down after. So you need quite a few. You need probably like a week or two of no movement. Now here's the other thing too, though. I'm going to look at going back to Volland. All right. So looking into expiration, right? It's next week. So this is the Vanna for next week. It looks like these are these puts? Are these calls? Strange. Up at the 50s, are they calls? Somebody bought calls, ton of calls here. This might actually float a little bit into expiration. I mean, it's like only a 1.5 billion in Vanna that would be expiring right now. But still, I mean, with all that high Vanna, and you're gonna have to expect that implied volatility to come down. Yeah, very bullish Charm here. For 10, let me see out today. It doesn't zero BTD. Yeah, so I mean, yeah. So it's actually Charm is kind of bearish going into OPEX. It's going to be a lot of resistance. I mean, obviously, all this is going to grow a little bit. Kind of have to wait for 45.50 to become hopeless. I guess somebody bought calls when that QRA came out and thought we were going to the moon. They were wrong. think, yeah, see, so even like you're gonna need, if you're gonna see an advance, you need IV not to really do anything now. Kind of high. Probably going into next week, people will be expecting a rally in this. Because charm is probably positive here. So yeah, like I guess to answer your question, when you were looking at um when I was looking at Vanna all expiration, I'm looking at the high level overall, outlook. I'm not looking for zero DT trades in that moment, or a zero DT outlook. And honestly, I tend to not look at a zero DT outlook before 10 o'clock anyway. So, all right, let's see. PGO, that covered call on UPS. How would you find that, or did I hear that wrong? Okay, so let's go. You're following? Yeah.
Yes, it's one of the new ones.
Yeah. Looks like we're having price problems on it. Cool. Can't wait till we get. We see 175. When you're looking at Vanna, positive Vanna above price, which I think is at like 130 is the real price, so 140. Positive Vanna is either a in the money short put or in the money or out of the money long call. So just go to calls. And yes, that is a covered call. You can validate that on Gamma. Oh, a bit too far out of the money, I guess. 175. Yeah, that means somebody shorted a call, means the dealer is long Gamma. The Gamma is always the highest at the money. That's why, this bar is really high. Considering this is negative, it's a negative call. So somebody bought a 138 call. So a lot of people were buying puts, it looks like. 135 puts, 137. People were very anti-UPS. Or they were just hedging. So yeah, it looks like somebody covered their position with calls, 175. What's one of our other new ones? Oh, I'll go in order. Everybody's that. I'm sure everybody's that. What's that on? What's another new one? I know SRPT.
Yep.
The most politicized biotech in the world. Yeah, so we got to check to see if the pricing on the new on all the new ones. So I think the price hooking into the NASDAQ feed we have. And SRPT just have like a failed trial. They just had like a failed trial. Most politicized biotech company in the world. All right. So we're approaching 10 o'clock. I will do today. Now, these are still hanging around. I guess we were pushing up a little bit. So price point. Now we're hanging around. So all right. Here's another thing to note is the price action in the first half hour tends to dictate what's about to happen. I mean, and it's just a tendency that I've noticed. Like if we are flat for like that first half hour, typically the paradigm becomes Bank of America, and that's what I predict. Like when I'm looking at, an early thing, and I see still messy, but because we've gone nowhere, it's probably going to be gonna turn out to be Bank of America. Um, this one, however, like if this is red here, and this, this turns into green down here, I mean, it's hard to determine. This today might be super ultra rare city or paradigm. Let's see if people start selling these puts over here and keeping this long, keeping these short call positions. The customers are not in there. Not dealers is a long call. But 4410 and 4400, the 4400 shrunk quite a bit. So you take a look here again at the y-axis. This is very high for this time. Somebody just full boarded the massive hedge fund, full boarded sold calls, 4410. Either that or it's the investment position prior to that just there. This was there yesterday. Both of them were. Somebody's been selling these calls to begin with. So that kind of meant, I guess, if for everybody out there that is claiming that the opening bell has an impact today, you are correct. Somebody's covered calls 4410 before the day began, and it is a significant position today. This didn't exist yesterday, though. Full puts. So right now, I guess you could say, well, I guess all these short charm things. That's the time. Well, I still gotta wait then.
So Jason, this is about the time when you would give the first update, correct? Over this month.
Yeah, give or take, but it's still kind of messy. So I would be like honestly, like at 10 o'clock. Like a lot of times, I'll be giving my first update at like 10:15. But this is existing position. It was existing before the day began. So ultimately, intraday is probably a data grid. Look at that. Ticket size of the day. Next week, $25 call. This thing. Big flyer. Only for three cents. COs are 3 cents. Applied volatility. But that's because you see that's not the reason why I came here for this. Don't know. This existing position might keep markets afloat for a little while. We'll have to see. That's probably honestly, because I know I'm like looking at the free market. That's probably why we froze like 25 points. It was an initial charm deduction from this existing position in free market. Maybe, I mean, yeah, that might have been a thing for everybody out there that believes that free market charm positioning is it's useful in some way. All right, and that's SPX gets 43.75. Come on, Volland. Volland doesn't buy SPX. Just us. I mean, technically, right now, I mean, if it stays like this, SPX can probably drift up to 4,400. But you know, I honestly think that those covered calls will decay. I mean, it really just depends. Comes to get far out of the money, but high value charm calls, seeing as though they decay. So, okay, that's a good question. Basically, as time goes on and you see like those big bars like the 4410 that we have existing now, you kind of just have to know that that will decay. So right now, 4410, if I'm looking at the SPX option chain, and I'm just going into Thinkorswim. I know nobody can see it, but I don't really watch it in Thinkorswim. So, but I'm looking at the option chain right now. And all right, so 4410 is currently 2 delta, and it's on 20 cents to 25 cents. And obviously, there's a large one-way thing. I mean, the open interest is low compared to what you see around it. I mean, the 4,400 is still very high, but obviously, that's all one-sided. That's one-sided track. So at that, 20 cents, 25 cents, it's going to take a pretty large rally, even make that any significance. I'm looking at like down to 44.45 and 44.40, where it's 5 cents, 10 cents. Those are probably latent orders. It's when we did our quote unquote delta adjusted charm. Basically, we were taking out these latent orders. So I think that something like 4410 and 4400. I mean, 4400 has a little, it's 55, 60 cents. 4410, it's not going to take very long before that 20, 25 cents becomes, nothing. I mean, unless it keep rallying like this, whatever, hardly that points or whatever. But yeah, and so you kind of know that that's going to decay. It's a low likelihood that we're going to reach anywhere to make that significant. And once that turns into insignificance, then you're going to, all of a sudden the paradigm change, quote unquote. But really, it's just that the options that were represented by that are now worthless. And that's another side note. And, you're going to hear me, I'm going to crash on Jexters a little bit. The Jexter thinks that 4,400 is a bigger deal than 4,410. Just the side note. They don't even care about 4,410. Well, let's see. We're going into the chat. That was my JK. Charlie Hardy. Nice work. Very good. So, all right. I guess it's time to give first update. Yeah, Big Bill noticed that 4410 was there yesterday morning. We noticed, we checked that on the historical, so thank you, Big Bill. But it looks like people aren't trading. So we go back to the thing. They let me, yay. All right. Oh, wow. So for this time of day, this is actually really low numbers. These are today's trades, by the way, the most active options for today. 16,000 sounds like a lot, but at 43.85, that's like actually 43.85 is pretty close to money. But basically, when you see like around like 10-15, when you see these numbers, it's kind of, you should start seeing some 20-25,000 strikes there. So this is really low. People are not trading today. Is there like a news thing or anything today? So look at my this is really low. It's like, well, I guess, it's Veterans Day. I guess, people are playing REITs in Arlington or something. President Lagarde's speech. Consumer sentiment. Came in pretty bad. Yeah, there's nothing going on. I guess, are people on vacation? This is very low volume. In general. I mean, so actually what that means is, in my opinion anyway, be more significant. Here's another thing too. So Trade Alert is coming directly from the CBOE. The CBOE is the only exchange where you can trade any option from the SPX index. Okay, they have a monopoly. They created it, somehow marketed it. Everybody loves SPX, right? SPXW is just a weekly SPX. The volume here is 15,316. When I go and look at my the volume, today's volume on the 4,400 in Thinkorswim, I see 12,630. Do you guys see that? I believe that the time and sales and the volume statistics on Thinkorswim are correct. I don't believe in them all. I think there's something wrong there. But that's just, I mean, that's just my opinion. It's just something I noticed when I'm, Trade Alert to me is the gold standard. Like this is the thing I would trust more because it's coming directly from the exchange. And no, it has nothing to do with my disdain for strong. It's still at the 20-cent range. All right, so here's what I'm thinking. Let's take out. All right, so I'm gonna actually put this. It's gonna be my update. My first update. Here's what I do. I go over to the here. I do a snip. And I'll actually even say, what's funny is that while I do my updates many times, I'm actually saying it out loud. So, okay. So, in a light volume day, which we saw in the Trade Alert, right? A light volume day, 4,400 and 4,410, Bloom has very large sold call positions by customers. However, 4,410 is currently 2 delta, and 4,400 is currently the delta is 4,400. 4 delta. I expect those 2 strikes to decay quickly, and upon any retrace, perhaps disappear from the 0 DTE charm chart overall. Therefore, so if those are taken out, you would actually be looking at an anti-jax paradigm, right? Everybody see that? Because this is 2 delta, this is 4 delta. Underneath that, we're looking at green here, right? And over here, we're looking at green. Now it's still light volume, but if I'm taking these 2 big strikes out that are, somewhat insignificant, you're looking at negative 103 million and then negative 80 million. I mean, just saying, this could be anti-jax. So there is a chance that we could drop down, and it's light volume. So I'm assuming the equities are pretty light volume as well. Steve, you can chime in the chat for how you see it. Taking these reds out, that's anti-jax, right? That's a lot of green. Was 44.35 there yesterday? What is 44.35 still? Delta 15. That's a big spot. Yeah, I mean it's still small volume, so I mean I wouldn't count on it quite yet, but we probably are going to fade to the downside a little bit. Like kind of fade a little bit, and if option uh we'll see if option players ramp up their activity. So that's exactly what I'm going to say. Well, honestly, like right now, so if I'm 1021, as I will quote, Steve, that's great in theory. What am I going to do about it, right? Um, at this point, I would be cautiously shorting, or maybe do some kind of like a short gamma bearish play. It's light volume, so you don't want to go long gamma. And short gamma could be scary, but I mean, if you do like kind of like a in the money vertical, maybe doing like a long strike at 4,400. Um, or if you're just using stock, probably today the best thing to do is use stock or futures themselves. And what is the charts looking like right now? So yeah, we've kind of bounced between just 43.60 and 43.70. Just kind of wait for a little bit of a uptick like we have now, 43.64 or something. Short future or short some SPY. And have that 43.70 as a stop. It's a pretty tight stop, 5-point stop, but that's what I would do. So I guess SPY right now is 43, 435.50. Yeah, I'd probably put on an order, kind of wait for it to pop a little bit or something. You day traders are better at figuring out when to enter, like what pops or something that you're seeing. But this is, I would probably short some SPY right now. I like 435.50 or something. Let it run. The only thing I would wait though, what the stop would be, honestly, is if a 44.10 becomes any more than like 5 delta. That'd be a stop. Right now, that would be like a 10-point SPX move. 15 points maybe. That's when it would be a stop for me. After everybody, okay, great analysis and breakdown. Thank you, Michael. By the way, Quetty came to the social, and he did not look anything like him younger. But I guess it's easy to like not consider the deltas of each bar to help figure out which ones matter and don't matter. This is a good reminder. That's true. Yeah, I mean, so we tried to do the delta adjusted kind of stuff. We tried to display that, but you can only do that so much without compromising the math on volume. So, all right, Michael's saying super cheap fly targeting the downside, scale out as it moves down. Here's the thing about fly, okay? in particular, like, yes, you're gonna get some decay today. I mean, it's a short gamma move, but you have to make it wide if you're going to take it off in mid-game. If you make it too narrow, you're not going to see any kind of gains. So, Michael, if you're doing that strategy, or you're putting it on 43.50 or something, make the wings like 25 points. Something very wide so that you could see the decay. You're basically isolating the decay in your short string. A lot of times we're doing flies here that we're targeting at the day, but we're putting those on at 1 o'clock, so that's kind of like 12 or 1 o'clock. That's like a little bit of a different story. But doing something like this at 10:30, doing a fly, make those wings wide. At least 20 points, but I would go like 25, 30 points, especially if you plan on scaling out. So I trade off the 30-second chart. Jeez. I can't even imagine doing that. Like, I mean, see, that's like, you guys are day traders, I'll provide you data, but I can't even imagine staring at the 30-second chart. I get so bored on a day like today. I would fall asleep. The other thing, too, about a 30-second chart is if the market moves like 5 points, it looks like, 80 points. It's like this huge bar. They're like, oh my goodness, but it's, 5 points. Yes, it's definitely a y-axis issue. And 3-point stops. That's Keep-Off and Citadel love market trendy. Yes, the market trendy. Yes, they probably have his order number in place. Like they had, because then on the Oprah feed they have customer IDs, and whatever market trend ES's customer ID is, they are loving it. They're like, yes, but they have a specific PFOP ready for just for him. How many times do you go in and out in a day? Market. Damn. 5. You've already made 5 trades. Oh, those are profit counts. I think 5 trades. Just put it in an hour. I do like, you see, like the way I day trade. I put it something in maybe at like noon, 1 o'clock, and then noon or 1 o'clock, and then just like leave it maybe to the end of the day, something like that. Okay, so everybody's saying Jesus. Hey, we went down. How's my short SPY? Anybody actually take that trade? No, because you guys all have your own trade plan. That's the way it should be. It's not that random, Steve. I was telling everybody down, down, down. Nice, Charlie. Charlie also came to the social. It was really good to see him. It was very humble, but I've been watching Charlie in the sub channels, and it seems like he's grasped Volland pretty well.
We're in the very early stages of planning our next one for. So we'll share more.
Yep.
I'm excited.
The next one. Ready? I'm about to reveal something. Ready, Jill? The next one is going to be in Antarctica.
No, it's not. I'm not going. You can hang out with the penguins all you want by yourself. I'm not going, neither's anybody else.
I've got all the penguins. It's going to be our best attended social ever. And we're going to have like about 2 million penguins, and then all the girl penguins are going to come.
Okay, so we're not doing that, but we will tell you. Yeah, we like penguins, but it's not going to happen.
We know a lot about Adelie penguins.
That's for another time. What's going on with the market? That's for the social channel.
Right, so 43.57. What is the 44.10? That's at one delta. Come on. Come down. A little bit. Come on down. Look at some of the other markets. Gold got crushed. What's going on with gold, Pablo? Hey, see that? It's going to be anti-technics. It's 43.35 at target. Like right now, I'd start saying 43.35 could be a target, right? Once these two disappear, 44.10 and 4400, once they disappear, it's an anti-jack for 43.35 as a target.
So just to walk back through the process, especially for people that are just hopping on, what made you think from earlier in the day that those two to the right, big red ones, are going to disappear?
So those were positions that were put on before the day began. That's the first thing. Considering that the market did not react heavily to them, that maybe in the free market, I mean, I don't know if the free market were dealers or not. You know, it's very possible. They were not reached very quickly, and these green bars starting at 43.95 down to 43.75, and then this big one at 43.35. That's all green. That's all bearish charm right there. And so when I'm looking at these large red strikes and I see what delta they are, you know, they're at like delta 2, delta 4, you know, so they will disappear pretty quickly. You know, there's going to probably be an update pretty soon where all of a sudden they're gone, right? And then you're going to be looking at this big anti-checks thing between 43.30 and 43. And anti-jacks, you look for the big green target, and that's your target, 43.35. So if you shorted where I told you to, now you're up like, you know, 5 SPX points. You probably can hold it and close it at 43.35 and get yourself 20 points, right? 30 points. And that's a good day, right? Okay, you go lay read at our own cemetery in the rain. Right, Mike. You had iron fly. I was like, if I'm thinking like if statements on the programming. And you see now that's a 50 wide fly. It's great to realize early like you need like a 50 wide fly if you want to scale out. Yes, I know dark matter. You have your trade plan. So he was saying there's no edge. I don't know. I thought I laid it out pretty well. But market's still coming down. Now it's down 43.56. Still got some time. You want to get in before 43.35? Still got some time. What is that? 44.10 delta? Is that one? 400? Is that 3 delta? Right. And now at this point, I have to read prior zero DTE alert. Say, like, is there anything that actually changed in what I said? And a light volume day, 4400 in a very large low call positions, and wherever 4410 is currently 2 delta, other than the deltas. Fixed paradigm. Yeah. If I become a target. I mean, it's nothing changed. No need to spam your texts. The more I know what a day trader feels like, because normally right now would be either like in a meeting or I'd be working, something like that. Like I'd be working on the white paper, and then I'd be listening to some music or something, and kind of getting lost in my own world. But sitting here staring at these things, and every update, you see a little twirly thing, and you're like, "There's some change. Oh, Jesus is still right. 43.35. Here I come." Right? That's right. It's when we launched this, and it was only updating once a day. I mean, I was so used to using it for kind of swing trading. It's amazing how it is very useful for zero trading. We'll have to see. We'll have to see if like what the success rates are and stuff like that. It'll come out. People are saying 43.85. Right. The volume indicator I use this phone is the highest volume of the week so far. Okay. So I'll go back to Great Alert. So I don't know what your volume indicator is, honestly. Um, but this is my kind of volume indicator. We're at the 26K at the 43.85. At around this time, it's lighter, but it's not. It's not strong volume, but it's kind of still kind of light. So yesterday's option volume, like option volume, is about like 45 million contracts a day. Just amazing, right? Like, that's how many. And so when I'm looking at SPX volume in particular, SPX total volume yesterday is 3.28 million, and this is after they had their little bond scare, right? But 3.3 million is their average daily volume in SPX. So 3.3 million contract. So looking at Trade Alert now, when you say 3.3 million, you kind of look aggregate. We can actually look aggregate, I think, somewhere here. Aggregate look down. Oh, this is just doing the strike, but so this is not a lot, right? Compared to the 3 million. If we're looking at SPY, that's a big strike. 35. Take a look at that strike. What's today? Zero DT SPY today, huh? So if I'm looking at the average SPY, that average volume is about 8.5 million per day. Obviously, notional is SPX wins, but on a strictly contract level, that 44.10 delta is now at 1 delta, but it's a 5.10 center. So now it's one of those late in order kind of things. You're gonna see it disappear, and it's gonna be interjects. Anyway, let's look at some. My chart. Okay, spy chart looking very Bank of America. 100, 43.8. Looks like those lines in the sand. Still, like you look over here at the y-axis, going 80 million up here, 40 million here. That's notionally, this is nothing compared to SPX. And that is why I focus on SPX. 80 million compared to even these small bars, quote unquote, small bars are 127 million at this one strike. and we're looking at aggregate 80 million in SPY, even though there's, almost triple the number of contracts. It would have to be 10x the number of contracts in order to get to the notional level of SPX. So that's why I focus on that. I don't understand why some other services focus on SPY. Makes no sense to me. But you can also see 4410 is getting short. It's at 295 million now. Before it was at 350. Obviously, not a lot of traffic on that. You look at the spread. Now, where's 4410? There's 4415. There is 7,000 contracts traded today. What we're going to look at 4385. Let's see. There's a lot of volume here. Let's see what Volland is saying. If it is right here. It's probably got a lot of volume because it was on there earlier in the day, like around the area. And those were the calls that were bought. Net bought call. Wait for this to disappear. What's the not too late. Not too late to pick up your short SPY. This is 4410 is just a 5-10 cent spread for one delta. All right. That sucker disappears. Let's see what I'm talking about. So that, and I guess you could say, it's why you can't just look at things in a vacuum, like the paradigms in a vacuum. Right now, you're looking at the paradigms in a vacuum and saying, guess it's now ancient, but morning, you would just say, oh, it's a, studio paradigm. We're going to stay in the same text of, what this delta is and will it disappear? I mean, price is far away from 40%. You kind of have to see that it's going to disappear. And you kind of have to what's the word? Forecast that. All right. Let's see if anybody has something. Shorted. Hey, Pablo, you shorted them yesterday. Hold on. Dark matter likes penguins. So, Jay Rest, what is your volume indicator? There's like a volume indicator you want to talk about. At this point, at 10:47, I kind of, and this is why I was kind of balking at doing something for, an all-day thing. Is at 10:47, kind of made the determination of what's going to happen, and until something changes, there's nothing really to say. This is volume of the equity. This isn't volume of the option.
Getting some more questions.
Yeah, no, I know. I was waiting for a rest. Because I didn't know what he was talking about as far as an indicator. But so I'll tell you what I use to determine option volume is Trade Alert. I've been talking with CBOE. I mean, Trade Alert is a product of CBOE, but these, if I go to trades and sweeps, for example. So these theoretical values are, a lot of times I talk about fair value as a way to determine which direction, if dealers bought or sold. These theoretical values, which, this huge, it's a binomial model that Hanwick uses. And that is, this is a good way to help determine which direction prices, or, which is a dealer bought or sold. This is just the top sweeps. So a lot of this stuff, I mean, this is gold here. This is like a lot of this, and the fact that it comes from CBOE, this, I mean, especially when you're considering, some people ask me, why is trading tick sometimes showing something completely different than what we're showing? And it's because when we do our calculations, see the condition right here. When we do our calculations, we're able to take into account the late submissions. Now, if you're just using Oprah and, it's submitted late, you can see this is above ask. And now this is the second high, this is a spread, I guess, right here, these two right here. But this is, quote unquote, above ask for December. And that doesn't mean that this is above ask. Both of these are on the ask side. And it doesn't mean that when it was actually executed, that it was above the ask. And that's because it was submitted late. So the CBOE has a floor. These pictures could go out ourselves, CBOE has a floor that when they make a trade, it's, exchanged at a certain point, but then when it's actually sent into the exchange, and then the exchange sends it into Oprah, by that time, the spread is 57 and a half, and this is price above the ask. There is no, like, I think it's like a half-hour time limit or something like that before you actually have to, before you have to submit a floor transaction to Oprah. So these things could be like super late. This was submitted at 10:01 now. So the time aspect over here, this is when it actually happens. So that's kind of how you would know. You have to look back in time a little bit, determine like, okay, was it actually at the ask or actually above ask? Yeah, when you talk about side even here on the trade alert, that's not accurate. It's just doing a calculation ask versus the execution price. So yeah, so when you look at like trading tips, I love the guy that they don't take these things into account. They're just looking at what's executed on the bid or ask your day, and you miss a lot. You miss doing it that way. You miss every single mid market right here, and that's the highest option trade of the day in SPX is the mid market. They miss it. The late mid market. So even if it wasn't mid market, you'd be screwed. You wouldn't even know where it is. And it's above ask. Is it above ask? These are kind of like the pitfalls of alternate services. Like making big assumptions. Kind of have to go to the trade level. You have to take these things into account. Otherwise, you get really messed up. So what is the price doing? Ooh, it popped. You guys have some time. 44.10 is still one delta. What is Volland say? Still kind of anti-text, although looking at some block puts there. They're customer block puts there. Are they block puts or are they 325? Take a look. Okay. I'll look at the top options. It was 43, 25, 10. And then nobody cares. 20. Right. Yeah, it's the idea that based on the TBOE volume, we could tell how impactful the Volland data would be for the day. Ideally, if we had a relative aggregate vol view by ticker, we could analyze that. So, Trade Alert provides that at the end of the day. It doesn't provide it yet. They kind of do. They have they send an email or option recap. You could get this data for free on the OCT. Go to theocc.com. You can sign up for email alerts, and they'll send this to you. It's not done in real time, but they'll send you the daily option volume every day for free. So that's something to, you know. That being said, though, Volland has like this. So when you say like how effective will Volland be, quote unquote, I mean, granted we're revamping this, but you look at 5, for instance. By yesterday, like the average notional volume, the underlying is 166 billion. So you're looking at 725 million that needs to be hedged, then that's dropping the bucket here. It's not even 1%. So that's kind of what now we're revamping it. We're redoing all the calculations. Right now, those calculations are based on a 1-day. Very excited to see 44.10 completely drop off the face of the earth. Prices recovered to 43.65 from 43.55. Looking at gonna go away. Let's see what the line in the sand is. Let's see. Probably around like the line in the sand on a anti-checks or checks kind of thing. You're looking at 43.80, 43.85. You're looking for the area where dealers start getting hung for selling. The other concern is this is growing. 43.25, 43.30. So I would start being concerned about this being able to reach 43.35 if these start growing and this becomes a Bank of America curve. 43.35 should. If this does not kind of reduce really fast, then 380, then this will probably be starting point. Because the other thing too to remember is if we get up to 43.75, 43.80, have we gotten up there? No, we've halted back at 43.65. If we get up to this area, the delta's here will start growing again. So I will put that in update because there has been a mini rally. Outlook hasn't really changed yet, but they're on track. Do this, and then I will leave you guys for a minute. I'm gonna do an update. Yep. So continuing with the light option volume today, we saw an initial drop in recovery back to the 43.65 area. One concern I have
threatening the yes, paradigm is the put line at 43.25, 20 to 43.30. Good. If those strikes start to bleed. So when I say, I'm about to say, like something that I don't say a lot, like those strikes start to feed into 43.35. What I mean by that is, probably around noon, around like the 11:30, 12:30 time frame, dealers are going to start exchanging their risk. And while Volland probably won't see that a whole lot, you might see some alterations in some of the charm and like that based on the timing and stuff of those transactions. But yeah, I mean, so if those that buying starts reducing 43.35, then that could threaten that target. So if those start completing 43.35 positive charm, and there is light option volume. There, down. Holding, be nimble if things change. Because the same theory that we had on that 44.10 strike, the same theory, which that is now like one delta something, right? Oh, we spiked 43.73. So now what's that delta? 43.10. Still one. It is very interesting. When something happened, by volume, that thing, VIX got crushed. Let me say something. All right, let me see.
Yeah, people were just asking about the move. Came in at about 11 a.m.
Yeah, I mean it's not dealer o'clock yet either. So yeah, here we are, 43.75. We're almost at the line in the sand. 43.80 or so. But right now, 44.10 is still 44.10 is still not an impact. It's still one delta, which means that it was probably a late order. Late, just like a pretty strong move. Somebody started buying up, but it's a balance. No, it's at balance because of this. All right, so let's see, 43.80. That's the line in the sand. It will be defended. 43.75 even could be a line in the sand. Will the area be defended? Here we go. Here's our test. Look at that pivot. Man, VIX is getting crushed. Very interesting. Probably, I mean, I would not trust this thing. I mean, HV is at 15.4, VIX is 14.5, a whole point. VIX is a whole point below historical volatility. I don't know. I mean, I know. So 43.75, 43.80 would be my stop. Again, I'm not a day trader, so I'm going to take what it's worth. This area would be my stop. That 43.75, 43.80 area. We almost reached it, but it's being defended. And that when I was saying like if 44.10 becomes like a 5 delta, that's really when I would start getting concerned. And it is 1 delta still. With 44.10 being 3 delta. Not a dealer o'clock yet, so this might be an opportunity. 11.10. It's also why I trade options. If it was like, if I did like that Michael, 50 wide butterfly, if I did that, I'd still be happy. I'd still be fine. Right? And I was not expecting VIX to get crushed. wanting it, so. Doesn't bode well for next week. If you went short at 43.65, I'd hold. I'd hold it. Until again, 44.10 becomes like 5,000. Then you kind of get scared. But yeah, like if you bought the 44.10, even at the bottom of the day, you made no money. Still 5-10 cents. And nobody believes it. No, at least option traders don't believe it. They would buy it. Directing is 42.75. That's, I mean, I was expecting for it to possibly get it to 43.80. That would be a problem. But it's like the largest bar as a line in the sand is open.
There's some buying coming in the big seven. Microsoft, Apple, Google, Meta.
What is that what's driving this?
That's what's been driving the most for the last 5 minutes.
All right, so let's check it out. See what they got. Very bullish charm on Apple. Yeah, but it's only 7. Over here, you look at Tesla and Trade Alert. The average is 10 years. All pound in the end. It's just crazy. I never so much volume. The people have gone in and out probably like 6 times already on this thing. You can actually look at I go to oh you know what? That's probably that here we go. The 10-minute open close for Tesla. Now, granted, in Tesla, CBOE is not a monopoly, so there's a lot more in here you don't really know. But look at this. They go in and out so quickly. So crazy. All right. Oh, we're bursting through 43.76, 75. Still, it's still Mag 7. Look at that. That was all tech. Is there news in tech, Pablo?
I don't see any news. No news.
No news. No news is good news. All right, so right now I would still be kind of holding, although I'd have an itchy trigger finger, obviously. But the You see, now this is kind of reducing. Like you see, now that's why I warned in the prior alert, like this could turn into B event pretty quick. The difference between what it was 15 minutes ago compared to what it is now. Fifteen minutes ago, we were just kind of looking, this was just scary or a little bit, right? With giant. I was like, that's right here, but yeah, you see this thing started creeping up. That's what I gave it was. All right, let's see. Oh, it's starting to come down. Looks like finding the stand at 380. If it's getting defended or if we're just, whatever. But yeah, now you see it's kind of becoming Bank of America a little bit. Big. All right, what's is our friend 4410 still 1 delta? Oh, it's up to 2 delta. 10 cent, 15 cent. Definitely low. Basically here, this is the key right here is this. It's not just the mag 7, but it's that hit. It's down 77 points in this large Vanna. And that's why I take a look at this every morning. You have 15, 17, now 32 billion in positive Vanna, a march down of 77 points in VIX, 79 now points in VIX. That's very significant. Look over that past, like starting at 1045, now down to 1110. That's, that was a drop of like 0.5 points, which is big. Seems to pause now a little bit. That's a fall crunch that, that's probably if you could do a dispersion now of ESPX for like the next week or two, probably make some money, right? Like go long IB, long IB, long ES or something. Want to go long vol, and probably long indices, and expect the indices to lose. Expected vol crash.
There is one
Yeah.
thing. There is
I mean,
one thing that's starting to come up. People are I think calling you out for missing this move and saying they got burned. Can you address that? Because nobody's talking about it in here. But
I mean, it's a light volume day, and I don't know. Can I address it? I mean,
well, I just
it's good risk management. I mean,
that's right.
I mean, I'm sure. That's the other thing too is I'm not telling you what to trade. I did not put on any trade for any of this. I'm saying this like I'm offering. This is something to think about and stuff like that. But this is your trade planning and this is your risk management.
I'm not doing your trades for you. Was I expecting this move up? No. We did not reach dealer kind of o'clock yet, so I've been kind of saying this is light volume, you know, that's kind of difficult. But we also have not crossed the line in the sand yet. So I mean, I don't like when people lose money or, you know, when things happen, you know, unfortunately. But
Yeah,
you know, you don't join the service to have somebody else to blame.
that's exactly it. And that's
That's
what,
the
I mean,
data.
people need to take accountability for their own moves in their trading. If you're looking for a place to blame, like, you know, dealers are a large portion of the market, but they are not everybody. You know, the fact that we are all in here, you know, there's many market participants. You know, you take this as a part of your plan. If you have something to talk about and you want to talk through things, we've been online all day. Let's chat. But if you're just here to listen to Jason and point fingers, like, you know, I have no problem showing people the way. We are here to learn and work together and, you know, look at what's going on. All right, I'm done. Volland is not a trade planning service.
On the flip side,
Yeah.
looks like this move might have started to exhaust itself. So you just give it like 5 minutes, it might be fine.
Yeah, well, I mean, that's why I said, like, a line in the sand is 43.80. And I think, you know, like, when you're talking like what the line in the sand actually means, it means dealers have to change their behavior. And in a light volume day, the line in the sand is probably pretty reliable. And if you guys, you know, if you know your short was cooked or whatever, I mean, I don't know how you traded it, but I gave you a target and a line in the sand, gave you maybe, you know, something maybe you could do. But if I were trading this and I were quote unquote stopped out before the line in the sand, you know, that's a trade planning issue. You know, because the line in the sand to me is where my stop would be. Yeah, I'm just, you know, that's
It's okay, Jason.
kind of
And
my thing, but that's
yeah, but this is a good lesson. Like
no,
moving
but I'm
forward.
trying to explain, like, if I were making my own trade plan doing this, that 40, I would be able to accept a loss up to 43 and figure out, you know, how I would do that trade plan myself. I actually even told you what my trade plan was. It was like that 44.10 when that starts becoming a significant delta. And it's still at 1. So, I mean, that's kind of how I would trade plan it. And, you know, if you guys are putting in 20% of your portfolio on something and you're not being able to handle, you know, a move of these points, then, you know, it might be time to revisit your trade plan. It's not Volland's fault. All right, anyway, we got to get going. I'll be right back. Okay. So, you know, even a half hour ago, we're looking at strong positive charm here. Go live, people sold it off, right? The other thing, too, and this one I wasn't expecting, was the drop in VIX. I mean, I guess I might have should have, maybe, but considering historical vol, I wasn't expecting it to go so far down. But that's why Mag 7, rallied. I mean, it's a, you know, when Mag 7 rallies, it's usually a vol crunch kind of rally. I think like dealers, you know, that's kind of like what the MO has been. So, I mean, it's a low volume day. Kind of sucks. I mean, it's actually probably not the worst thing that it was a fail kind of day for zero DTE. it is a risk management game. You could see the analysis that I went through, and even though you could go through analysis, very well, things could still turn against you, you know? So you gotta definitely be conscious of your risk, manage it, because there will be days in which it will not work out. You know what I mean? That's the way I'm gonna start. But yeah, and it's a bummer, but that's what, that's part of trading, guys, and if you can't handle losing, then you probably shouldn't be trading, right? Anyway, so 4410 and 4400 still seems to be big time strikes. So I'm looking now at the at their deltas. Well, delta is 4400 now, so now it could become a target. About the 20 delta is when you get like the max charm, max Vanna kind of area, and 20 delta is 43.95 right now. So with that transition, 4400 could be like a decent target, and maybe even get up to 4410 if it decides to get there soon. So this is just kind of yeah. But I mean, also the other thing to note, these are still pretty low volume bars, although combined it's probably about $1 billion. So close at 500. And then these bars, 4410, now at 4 delta. You see, like before when I left, this was at like 200 million. And that was when it was 1 delta. Now that it's 4 delta, it is at 1 billion. So I mean, you can see that once that delta starts kicking in, once it starts becoming significant, then that's what happens to these bars. So, all right, let me take a look at the chat window. I'll answer your questions, and especially on low volume days, you have to be nimble. You just have to be nimble. There's no other way to go around it, and that's why I mentioned low volume days. And I think yesterday when I said we were going to do this, I said I might put on a trade, but I never put on a trade because I knew I was kind of like, with low volume, and that the bottom side in particular was kind of getting a little sketchy to me, below price. So that's why I was kind of. But anyway, who is it who said that? Looks very bullish now. Yep. Okay, so Turbo Ricky says, what does SPX Vanna tell about the market prediction? Okay, so here's the thing. When we're looking at total Vanna, and I'll pull it up again. I did this before the market opened, and there is a reason why I did this before the market opened, because this is like we're gonna have like what I call the watchtower. The watchtower, quote unquote, where there's just like a checklist of things that I look at in Volland and out of Volland. That USD JPY rate, when it starts getting to be concerning, if that keeps going up, if the yen keeps weakening, you have to be afraid of Bank of Japan stepping in at some point, right? But here, so let's look at total Vanna. Right now, aggregate Vanna is really, really high. It's probably about maximized where it could be right now, right? You're looking here at like the 44.85, 43.90 area. And when you add these two together, 16 and 17 billion, so it's like 33 billion. Any big move in VIX, you're gonna get, this is gonna result in a big move in big hedge. And it's not just VIX, it's the over and under VIXing, it's VIX compared to the spot vol correlation. And when you look at, which is, give or take, rule of thumb, we're up to 43.90 now. So yeah, once Charms was bullish, now 4,400 could be a new target, like I said. But right now, VIX is down 94 points. And the SPX is up about 1%, right? Or give or take a little bit more than 1%. 6 points could be down 0.7 for every 1%. So this is under VIX. And a little Friday, so maybe it's not quite under VIX because Friday has a huge impact. Like the Monday effect, but it shouldn't have even that much of an effect because of where historical volatility is right now. So this is why before market open, this is what I looked at. I looked at what is the Vanna overall outlook. It's very, very high, very high. So if there is a strong IV move, you could expect a strong move in SPX, right? And when you look at the chart, I mean, if you look at VIX and the timing of VIX versus SPX, when SPX started going up, you saw VIX drop about 0.6 points within, that short time frame, and SPX only went up, say to 20. So it should have gone up about 40 points when it went down, like 0.5, 0.6. So you knew that it always takes a little bit of time for SPX to catch up to VIX when there's something strong like that happen. And with this amount of Vanna, it's not that surprising when we saw a vol crunch that we kind of moved through a little bit, that line was saying. The other thing too to note is with Charm here, obviously they took off those call positions. They're gone. And I mean, they were gone long before even right now. So, so I mean, they were gone like 15 minutes. As soon as I think option traders started seeing that vol crunch, they knew, we're going to take away our short positions, thought calls to hedge their short positions. So, yeah, so that's very bullish. That was bullish. Got to stay nimble on these zero DTE things. But anyway, all right. So let's see what other questions we have. So yeah, that's turbo. That's what SPX Vanna is telling me about market. On a swing time frame, it should be lower volatility, and any VIX movement is going to move the whole market pretty strongly. And that is, when I say VIX movement, I mean deviation from spot vol correlation, which currently is about 0.7 points of VIX for every 1% of SPX. And that's the nature of day trading. Yeah, thanks guys, awesome. You're welcome, everybody. Okay, so nobody said anything. They did the same thing.
Yeah, I don't think more about the HVIV spread and how that relates kind of up to top forward. Now IV below that.
Yeah, so I'll bring up another all right. This is historical volatility, realized volatility, however you want to say it. 14.85. Basically, think of this as the realized VIX. So 30 days ago, VIX was 30 days ago, VIX was at 17.6%. Okay? Just checking on a thinkorswim. The realized volatility was 14.85. So that means whoever was selling vol at the top made money. The market has recognized this and started selling vol. Over that time frame where we had that big rally from the QRA thing, we undervixed tremendously all the way up. Everybody was selling vol. Seemed like that was the liquidity, the liquidity recipe for the day. Right now, what the normal spread is about 1 to 2 points. So mostly So like that 17.6 versus 14.85, that was only slightly above average, not out of the ordinary. As far as like the realized volatility versus the implied 30 days ago. Right now, you're looking at a VIX that is so compressed that it is at 14.49. It is below what the realized vol is right now. Doesn't include today. That's the CBOE does this once a day, right? At the end of the day. Because they do a close to close. They do a close to close measure. All right. This means that the expectation of 30 days from now is supposed to be a compression of volatility. Basically, nothing, basically no movement. All right. Do kind of like a context. A 16 implied volatility is 1 out of every 3 days is 1% move in SPX. For 14.85, you almost say it's like 1 out of 4 days, 1 out of 5 days, give or take, right? So it's a week. You should get the 1% move. Let's take a look at the prior week. We've already had 2 1% moves. Last week we had 4, 5. We had 4 1% moves and one that wasn't so far 1%. The week before that was 3 1% moves down. The week before that was 3 1% moves down. Basically, what I'm saying is that the implied volatility is very low compared to what it should be right now. You can even see, like right now, even though SPX is still going up, implied volatility bounces a little. People know this. People are buying, right? Yeah, exactly. The carry is negative. So basically, if you're going to go long, I mean, I don't just short gamma trade that. I mean, if you're bullish, that's fine. Go bullish, long gamma, buy straight up call. So yeah, I mean that's essentially what it is. And today is kind of even more. It's really setting up for a trend. Maybe not today, obviously not today. Maybe next week. Next week will probably just like cruise a little bit. Maybe we go up a little bit, but it's setting itself up for a fall explosion. And with 32 billion in banner, it'll move. It'll move. So I think that's if that answers your question.
Yeah, that does. Thank you.
Yeah, no problem. So, making sure before I say this, no more questions in the chat. Pablo, what is going on? What is going on with the yen, dude?
Okay, so the Bank of Japan knows markets very, very well. Very well. It's probably the most informed central bank on how markets actually behave. They have a whole lot less ability to grasp economic fundamentals, though. So they're well aware that if they make a policy shift, they're going to cause a ruckus in the markets. So they have 2 things that they're going to do. One, wait for the rest of the world to go into a recession before they start like doing stuff. Okay, in which case their actions would have minimal market impact, right? Which is, I think, a little bit of what they're waiting for. And the second is they get dragged into it because inflation domestically for them runs away, which the market looks like it's going to try to do that to them, right? Like the more the dollar yen goes up, the more of a net inflation impact the region is going to see. So they have stuff they can do to try to halt it from going up, but in reality, the market has this trade in its teeth now, and it's probably not going to let it go. The other thing is that because they have what they think is a supply chain issue with regards to inflation, they just announced that they're going to start spending to ease supply chain pressures, which in reality is going to do nothing except for exacerbate the domestic inflation picture.
Yeah, that's kind of cause inflation.
Yeah, that's going to cause more inflation. So I think what you're staring at is dollar yen that's going to make its way up to 155, 160. And then their inflation is going to run out of control, and they're going to be forced to hike. That forced hike is going to be something on the order of 50 basis points. The market may take the Japan rates there by the time they go there, but the market will have priced in what the asset disposal will look like when that occurs. Meaning we will have probably sold off assets by the time we reach that point. There's a part of me that thinks that they have better odds if they just bite the bullet now. But I don't think any of them are going to be willing to take that risk. The other bit of this is that they've been waiting for their domestic companies to manage their interest rate risk better, risk management at the financial companies in Japan. The problem is the chief risk officers for all those guys are like in their 70s and 80s. They are slow. They are conservative, which argues that they will never get their house in order in time for before the change in policy. And the last bit is there tends to be a inheritance tax that's pretty punitive in Japan, which argues again that many of these will be very reluctant to manage risk accordingly. So I think, I think there are a couple of trades you can do off the back of this, but if you're just looking at this as sort of a risk barometer, yeah, your trigger points are probably going to be when dollar yen gets above closer to 155. Your other trigger points will be if the Japanese banks start selling off meaningfully, meaning not just like the 10% they've done already this week, but like down 20, 25. And then I think the die is kind of cast. I don't know if the rest of the market appreciates this risk point as saliently. Like everything I look at suggests the market is not. So I think that could be like a really pretty meaningful surprise factor to the market. Because right now, like what our market is doing is pretty clear. Like don't buy anything except for Mag 7. That also kind of lines up with what happens when we start going into recessions. Momentum as a factor, long short, really performs very well because everybody kind of gets the joke. Growth is slowing down, so you don't buy sticky stuff. You buy stuff that's somewhat protected. Historically, that's been defensives, but with yields going the way they are, defensives don't seem to have the same protective value, and the only thing that seems to be working is tech. So, yeah, I'm not super enthusiastic about stepping in front of that bullet train. I really want to, but I think I'd get my head blown off doing it. So, there's a long way to fall. I think you kind of wait for the trend change before you try to jump on that kind of thing. It also means that guys who are long only will keep trying to bid the market up because Mag 7 seems to occupy much more market cap weight to all the indices. So you're going to get days like today. It's going to happen. Low liquidity days and like 7 stocks basically moving the index, right? Like that's kind of what you're left with. And there will be days we sell off too, but I can pretty much assure you that like you'll probably be on a 50-50 ratio in terms of what's leading the downside, between cyclicals and tech. But the upside will most likely be tech consistently. So I don't think any of this changes. Like we have days where basically we drift down slowly and then we go up really fast. Right? That's like pretty much a hallmark of the bear market. The only issue is that the range in which we're going to be playing in is like probably 4,500 down to like 4,000 until we like regime shift and something changes outside of that range. But like that's a pretty wide range to be playing in.
Yeah, no, I've been very like, I cannot just buy that X7. Like I don't know. It's value, like it's just something in me that needs
You're not buying these things because you're like believe in the valuation or the growth story. You're buying these
Right.
because you think everybody else is going to be buying them, and it's like a place that you can store your cash. I think that's what this is being used as right now, because your traditional uses of cash safety are like not available to you, or they come with a whole degree of other commensurate risks that you don't normally have to deal with in every other cycle. So, yeah, this is like a probably one of
the video Vanna.
like I think if you're trading equities, you need to have a very solid framework on how you understand those top 7 names, their delta, the buyers, the sellers, and what their wall surfaces look like. Because I think like nearly 30-35% of your decision weight is going to come from understanding what you think those guys are going to do.
Right. I think it was good.
And today's like a really weird day in that like bonds are clearly selling off and like stocks don't care. It's like the first time in a very long time where that's been the case.
Bonds have bounced, haven't they? Today?
I mean, they're up from the lows, but like if you look at 2s and 5s, like 2s are basically under where they closed yesterday. 5s are basically flat. The only thing that's really up are 10s and 30s.
Yeah.
Which, you know, I think that kind of matters more towards the like tech heavyweight stuff. But it's it's definitely like a confusing day.
Yeah.
I did not have it in my daily journal that today would be a green day, up 1% in SPOOs.
Well, it's not the upper percent. I mean, that's not to me. The thing I didn't have on the bingo card is minus a point fix.
No, the vol crushes is like insane to me. I don't even know how to explain it. Like we can't figure it out. Like to be honest with you, we were like we cut some of our long Vega, and then like probably about 5 or 10 minutes ago we started buying it back and then buying SPOOs against it, because like I think you're getting paid like a convexity trade right there. Be long the ball, and like you carry it by being long delta. So if you go up and balls continue to compress, then like you should be hedged. And at some point the ball stops going down because we're going to be out realizing what that implied vol level is. So at some point those balls stop going down, and if your spot hedge keeps working, then you're making money, and then you're waiting for that VIX explosion, and you can tear off the deltas pretty quickly. So
I honestly think like it might be for this week. I mean, I'm looking at like Microsoft. I'm looking at some of the Max 7 Vanna right now. This is just for it's for Microsoft. Microsoft Vanna is at 100 to it's about 400 million. What's Microsoft trade?
like it's like Jesus. Microsoft trades 20 million, 25 million shares a day. It's a $360 price.
166 billion in
Yeah.
But yeah. So you need vol, they could use a super vol range if they're, look at this, their vol is like 13 and a half. Yeah,
Right,
the vol
so-
here, oh, this is SPY, I'm like,
No, that's like 9 billion market value.
28 billion,
So
the 22 and a half.
can we just talk real quick about this 4410 strike? If you don't
Yeah.
mind my asking. All right, so this 4410 strike, I see like 16 delta now to it,
Mhm.
right? So like you kind of need us to go, how far do we need to go? I mean, we need to go down at least 10 handles before that goes back to like a 5 delta, right? So like it argues that if we're just here by the time it's 1 o'clock already, but if we're here over the next hour and a half, we're slowly gonna get dragged here, aren't we?
We are. I mean, you could say 4410 now is becoming a target.
Yeah.
I mean, it's 16 delta. I mean, now, you know, and you can see it in the chart too. If we look at the 0DT, and I should probably put an update now that we've gotten closer to 4400.
The 4400 is gonna drag us, and then like the 4410 are gonna start to matter a whole lot more. And at that point, like Mag 7 might actually go down, but it won't matter because less S&P dealer buying. And that's going to be a run rate of like call it 700 to a yard. Yeah.
It's an average of 4410 right here. You're
Yeah.
looking at 1.6 billion on this strike alone.
Yeah.
1.5 billion on this strike alone. And you know, if you remember about an hour ago, it was 200 million.
Yeah.
So now, I mean, if you want to, you know, I'm not going to say, you know, like, again, no trade advice, but that's probably a good fly
Fly spot,
at the
right?
end of the day. Yeah, of course.
I
All
Googled-
risk management.
you have to risk manage. You have to risk manage.
That in the updates for all the people who cannot relying on their checks. By the way, everybody, I have a hard stop at about 2:40. So another thing to note is, remember charm, when we did that delta adjusted charm thing, we adjusted charm for per hour as opposed to a per day measurement. So that's 1.5 billion in buying needed for
Per hour.
we have 3 hours left.
Fuck me. Okay.
So we're probably going to hit 44. We're probably going to hit 44.10. But it's very interesting what you're saying about the yen. I guess they know that what their words is going to do, and it's kind of funny that the last BOJ meeting, they were trying to tell everybody like we're about to get rid of this pricing defense. It is now a flexible, you know, down. That's me.
Yeah.
10 years. That's 10 years got above 1% yet.
Actually, let me just check. I'm kind of like just operating under the assumption that it's gonna. Today, it's at 84. 84. It got as high as 95 last week.
90. Oh, that's pretty close. It's amazing too how high it's gotten and how much the yen weakened, even though we had a bond rally.
Yeah. I mean, the other thing is like the correlation between dollar yen and Nikkei is like insane. It's very clearly being driven by what dollar yen is doing. That makes me think that like if dollar yen actually gets to 155, you're supposed to short Japanese stocks. Like, yeah, the yen move will help you, but like you're supposed to play the downside. And the only issue on timing is if like their financial sector blows up before that. That might actually stop all this before we get to 155.
Well, that's what I'm more or less afraid of. Just it's everything falling apart before they do anything.
Yeah.
Like all that hedging for that.
Good God.
I'm looking the voice channel. Yeah, no problem. Yeah, I mean today is Veterans Day, so kind of maybe stronger volume day would be better, but today. Well, that's good, Jay. That's the other thing too is, and then JRS. I mean, I'm pulling out your chat here. People are gonna appreciate the value. Just made back what you lost this morning and up more. That's a nimble trader and one that was probably managing your risk. Like that's the big thing for dealing, especially in day trading. And with that kind of thing where people talk about the quarterback just threw an interception, he has to go back out and forget that he just threw an interception. You can't forget that you threw an interception. You gotta manage, also not just risk management, but your emotions. So I'll tell you what I like, Mitch. We could come back a little bit here and there. You hear me?
Yeah, you hear me?
Yeah. Welcome to the party, man.
It's been a hectic day, huh?
Well, that's good though, because I mean, I'm glad that one thing I can't control is how people trade in the middle of the day. Somebody's gonna close out their positions and stuff like that. I cannot, I can only see what the existing positions are. So
Really?
yeah, it was saying bearish. I mean, I was expecting 44.10 to move away, and then it didn't. Then that was it. They closed out their short call position. Another thing too, I think I said this in the group before. When you see something like anti-jacks or jacks, I think those positions are associated with the underlying that I'm not looking at. Like somebody is going short, long but short calls, they're buying stock underneath that I don't see. But that's speculative, but I think that's based on price action that I watch. I'm pretty confident that's the way it is. Maybe probably you can tell me if that's the way people run. But so if you asked what commodity, I'm sorry, and I am a glutton for punishment when it comes to this. But still, I mean, natural gas imbalance is so high, like especially now at this level. This level is like a value, but like buy in the money call, for like a year out with an El Nino coming. That that's a lot of precipitation in the south and mid, and Virginia.
That's what they were saying about the hurricanes. Those didn't come in.
Yeah.
Very sure pop.
Yeah, and that gas, I'm like, I'm looking at, actually, hold on. This is another service that, it's like a fundamental look at, it's not very actionable necessarily, but, it's like, well, I'm loading up. You see, this is how I get 800 tabs on my thing, looking at it. Right? So, right now, this is like the weather data, and like this is the natural gas demand. This red line is like normal. Right now, we're like natural gas getting flushed because the temperature is above normal. This is how many gas weighted degree days you're supposed to have. It's supposed to be at like 20 out here, but the forecast is like 18, 19. But the imbalance is like the rig counts and everything are so down. Even though production is up, but production is up because of oil. So if oil starts coming down, as it has been, I think natural gas has a chance to come up. It's a little bit idiosyncratic too with the rest of the market. So
That's my personal thing. And the way I'm trading it, yeah, well, the trading the trading that I do on it, that I've started doing on it is a ratio spread. So you buy two calls in the money, or like $5, $4 calls out in like April for August, and you sell one call that is like all the way up at like 10 or 11, because the view on natural gas options is so far, it's so far up, like on the upside, that you can get some decent value selling those calls. But you don't want to do it naked to, picking up like a option sellers kind of guy. But if you're hedging it using long calls that are at the money or in the money, that's I think that's a huge value. Like if you're bullish on the commodity, but
Yeah, definitely look into that in the weekend.
yeah, that's one thing. If we're hitting a recession, I still like gold too, but now that's more Pablo's land than me. But I do believe we're hitting a recession. But I mean, from an economic standpoint, I think the recession is. And if it's not already here, it's
If it's when.
yeah. But that's why I do, and I was already wrong on the when, so that's why I did like long-term leads as my trade for that. But look at this, it's now gone up to 1.8 billion. 1.761. Yeah, so 4,400, 4,410 is probably the next. We could go up that high pretty quickly. Gold taking it back. Wow, pretty strong down movement there. Yeah,
They might get all the flows. Here's what
Bitcoin has been shooting up. I just don't. I've never traded a crypto. I don't buy them, and it's primarily because I don't understand the force behind it. Some people say they're like gold replacement, but they're completely uncorrelated. I mean, at least when I checked, they're not very correlated. There's so much fraud out there, obviously, in crypto, between FTX, Binance, and I can't see myself buying it, and not even Bitcoin, which everybody says is like stable and everything. I can't see myself doing it. Yeah. So anyway, that's my answer to you for commodities is that. All right. So Baba swings with B coming to the U.S. I mean, I have no idea how that would affect Baba. But let's take a look at what Baba is. So here's another thing about Baba, as far as like Volland goes. This is a ADR, so all the primary trading on Alibaba is not here. It is, and it won't be in even American options. I mean, it's in China, so it's kind of like, even though we have it, because there's a lot of option volume on Baba, and so you can see where it is. And obviously, I think like if you're bullish, 90 is the strike to go. But I don't think you can't really count on it on the Volland stuff with something like this, where most of the trading is on a different exchange in a different country. But we have it here just in case, maybe, and probably if you live in China and you're trading on the Hang Seng, you're gonna. I think like Baba's on like 3 exchanges now. When you're trading on that, you want to incorporate this into your model. Good idea. But so I would not say, like, if just based solely on what I'm seeing in front of me, 90 is a magnet and probably would be a place to be, especially since I think I'd be very high in product. Oh, it's very fun. Okay. I think IV is very high. So it's straight up. At 38, yes. So like 39 is such a huge company. We trade only like 4 billion here, but again, they're ADRs. Was not the primary place for that trade. But yeah, judging strictly on this, I'd say 90 is a magnet that I would make sure that oversees. I think the next the new data source. We have futures data come with that as well. Yes. So what the new data source is like right now we get Oprah and our equity pricing through Polygon. Okay. You know, and we only have Polygon has a limited number of exchanges, and they are good at technology, but not great at creating or kind of managing the data that they are receiving. What we've ended up doing is switching over to a new company. We're actually even helping them build their API to connect to us. And so they have all the exchanges, and we are going to be signing up for them piecemeal. But I mean, obviously the first ones are the ones we have already, the Oprah. I think a NASDAQ, is it a NASDAQ? So we have some for stock prices. And we're going to be connecting to CME and SIBO. So SIBO right now is they will be able to give us like that real-time pricing on SPX and VIX and all the other we'll actually have access to all their indices too, like the RVOL, 9-day VIX and all that. And then CME will have access to all futures. Now we're going to have to roll out those futures little by little, and the reason why is because futures are calculated differently. The options on a future, like if you buy a December option on ES and then a March option on ES, it is not based on the same number, based on the. So we have to figure out, number one, I mean, calculating it is probably easy if you just count each underlying as a separate symbol. But then if we are trying to kind of do a combined analysis on that, we have to figure out like the most effective way of doing that, considering that EF kind of has its own term structure, VX has its own term structure, and Q, and that term structure has an impact just as much as like a regular underlying price. So yes, we will have futures available. We just have to figure out it's probably a lot simpler than I'm thinking it will be, but we just have to figure out the way to recalculate the display. We might have to actually put on a different metric to kind of do like some kind of contango or backwardation. But yeah, but yes, we will get futures. Okay. All right, cash. Tagging me again. Speaking of fraud and crypto, did you ever get that BTC requested to me via DM? Yeah, we get scammers every now and again. Sucks, but gold boarding in the money call for target 90. That we have. All right, sweet. That was at 1:13. We got 6 minutes. We're getting killed. Oh no, we're in there. Report calls. And now I lost track of what the conversation was like. It's like I feel like I missed like 3 messages in this that. Pablo just sent me a question. What am I wearing, Pablo? So you're asking.
Wait, what? I didn't ask you that. What are you wearing?
Here, I will show you. This is my Veterans Day underwear that I'm about to show you. Ready?
Whoa.
So the Captain America t-shirt. That's my Veterans Day.
Patriotic.
Very, yeah, patriotic and commercial, which is also patriotic at this time.
Very true.
All right, let's do another charm check. Yep, all the same. All right, so let's see. It looks like we have interesting.
You see that question? Question you see?
Oh, it's a question. Oh, I was about to. Okay, let me answer the question, and then I have some zero DTE data that I can share. Are there any signs to look for? Today's charm could change back to anti-Jackson Bank of America. Look, I mean, so here's the thing as far as like when something transitions, when the charm transitions, that's because there's people putting on trades. One thing I will say is that it seems like option traders, and this is just based on what I'm looking at it, option traders are a bunch that likes to hit up momentum, and it causes a little bit of continuation. In this time frame, it looks like, I mean, I'm still going to kind of say 4,400 will be a target, but it's going to take a lot of trading to overcome this bullish charm on 4,410. I mean, it's going to, that's 1.8 billion per hour here of 130, which is extremely high, or, low, I guess, negative numbers, but extremely low. And I think probably everybody's away on vacation. So I'm kind of, I'm kind of gonna scoot back a little bit, and kind of say we probably won't transition again. That 4410 was moving large all day. I thought it would fade. It did not. So it was I guess you'd say it was a bad call. Instead we've all crunched and made it relevant again. But yeah, so I mean, so I don't think we will transition. But it's really kind of out of one's hands, unless you can kind of predict when somebody else will trade. And if there is a transition in momentum and you start hitting something like a line in the sand, that's when you could start expecting different paradigms. However, targets, I mean, when you hit a target, that is not usually going to change the paradigm. Usually hitting lines are the same, especially on Jacks or anti-Jacks, it's going to change. If you hit it on Bank of America, it usually stays Bank of America. Okay, so it stays Bank of America and it stays balanced. So it's just gamma trading at that point by dealers. But okay, so some statistics so the question would be, how common are each of the paradigms, right? Like what is the most likely paradigm? We could do like I don't want to say Family Feud, but we could do like what do you think is the most common paradigms intraday, at least in the past several months? We've been doing this analysis on zero DTE since January when we've had or July when we've had the data available. But I'm looking. Yeah, so since from January 3rd to July 31st, what do you think is the most common paradigm type in chat?
Do I get to guess too, or no? Because I'm pretty sure I know.
Well, as long as you haven't checked in Slack, in our Slack page.
No, I have not.
Got 3 votes for B of A. B of A, okay, yeah, go ahead. See it.
My guess number 1 is Jets. And that's because it has to work some of the time for these Jet services to have something. So then by default, we
Alright.
have to work, a decent amount of time. Obviously, we know it doesn't work all the time. And then based on your alerts, I would say then B of A, and then anti-Jex, and then City. That's my guess.
Okay. So who is look at Mrs. Wiz is fading the crowd. Everybody's saying B of A. We have 6 B of A's. Mrs. Wiz is hitting. Yes. The most common.
Honestly, I would love for it to be B of A, but I really think it's Jex.
Okay. Well, also the traders are also have their head in it all the time, so. But it looks like who is fading Mrs. Wiz, and the answer is with 55.7% of the paradigms. So this is separated by every half hour, by the way. So so this is like 55.7% of every half hour block between January and July. Bank of America is number 1.
Wow, that's excellent.
Jex is number 2. Jex is number 2 at 37.1. Anti-Jex is number 3 at 4% of the time. And Cidial is number 4 at 3% of the time. So
Good job, everybody.
something that I kind of find funny is, we named these after the papers that they were featured in. And I find it, to me, I find it very funny that when Chris Cidio put his paper up on Twitter and made a big, ballyhoo, and everybody was like, "Oh, this is so great, this is, wonderful." His assessment of what dealers are doing is the least common. It's the least common out of all.
I find it funny because I think for a long time we thought anti-Jex was the least common, right?
I mean, yeah, I think it's also least common when we're in like I think it's least common like across all equities. But yeah, I mean, the Cidio barely happens. The other thing too is the Cidio paradigm happened. Like we probably started seeing it when, like Jex and anti-Jex targets are hit, and there's no rolling, and then it looks like a Cidio paradigm, and it looks like it's going to get pinned at the target. So, J-Rest and Pro are talking in other languages. Definitely, Kubo Parse means Wiz sucks.
I think I'm looking it up now on what do you call it? Google Translate.
That's fine.
I don't know. I don't know what language I'm gonna guess Portuguese, but I'm not 100%. I could totally know.
Hey, that's not what it means. No, I'm gonna look, man. It takes a.
Spanish. Wow, that does not look like any Spanish I've ever seen. All right, I won't try.
It's because your Spanish is Spanish, not Puerto Rican or.
Well, oh yeah, I mean, and depending on where you go in the Spanish-speaking world, you can't understand.
And it's not.
Oh my gosh, wow, learn something new.
What percentage of Panamanians either work in a resort or work in the canal? So what is like Panamanians like? What's your other than trading 0 DTE? Oh, hospitality. Yeah, like that's a that makes it real, right? Like a finance, legal. I guess that's combined. That's like offshore gambling sites, right? Yeah, no, I was just keeping that. I'm not that sensitive. Joe got upset when somebody said they lost, from earlier today.
Yeah,
It's like ultimate.
Jason is a very thick skin. I'm starting to get a little bit thicker skin, especially moderating. Some of you, not all of you, most of you are fine. Most of the time, you guys are like fine and you do your own thing, but yeah. Sometimes I get a little prickly. I'm like, what? You know, we want you guys to not lose money, but it's part of, you know, it's either you win or you learn. So it is what it is.
Mama asks, have I determined the most profitable trade for each type of paradigm? So back in a while ago, I was just talking about like dueling ratio spreads for Bank of America. Um, I kind of had to look into it a lot more as far as you know what's actually happening because Bank of America, the way it seems like is as you approach a line in the sand, it should be gaining momentum to that direction when you're looking at chart, but that doesn't happen. And we've spent like a couple months and, you know, we've been parsing out the data quite a bit. And we realize, at least I realized that the true line in the sand is not so much the tallest bar. The true line in the sand is where the charm hedging equals the total premium that the dealers collected. Because in Bank of America, dealers have essentially short straddles or short stranglers, everyone talking about. And it's a variety of stripes. So it's not, and they don't care. Like if they end up between the lines in the sand, they kind of make a little bit of a bonus. So they are happy. But I think like they have to make a decision most of the time in these lines in the sand. Like, which way do we go? Right? Like, do we gamma hedge and protect our profits that we're supposed to get? Or do we defend these areas and defend it and you know keep some of our premium, try to keep premium. So Bank of America and like Bank of America, basically the trade plan, and I talked about it with Lex a little bit, is put a condor rod at the lines in the sand and have a tight stop. Like if the line in the sand is broken, it's probably going to go down 10 really quick. Either have a tight stop or just kind of like line up your condor 10 points further out the line in the sand, or you can kind of, I guess, you can adjust your whole condor if you you know if we feel like it'll bounce and not bounce too much, stuff like that. You could adjust your condor and squeeze it a little bit and try to gain, you know, try to make it cost neutral. Does that make sense? Do you know what I mean when I say shift it and squeeze it? You know, like okay. So basically, so Bank of America, like, and this just now I'm an options guy. That's kind of how I trade. If I were to trade like straight futures or stock, that would be a little bit more difficult than Bank of America. It would just be kind of you would have to make a determination at the line in the sand if it's tested. Like, okay, are we going to bounce or are we going to continue? And I think that would be kind of like a flow-based question. I think it's easier to trade options in Bank of America than it is stock. I think it's easier to trade stock in all in specs and anti-jacks. I think it's probably easier to trade because you have a target, you have the line in the sand is your stock. You know, risk manage well. That's pretty easy, right? If you're doing options though, it's very difficult to kind of like buy the long side of the target and you know have a stop that's in the line of the sand. Because if you bought, you know, like today from anti-jacks, you just bought like 43.40 or something like that, you know, of course using decent risk management. If you just bought those, we even had a little dip down to 43.50, but you're kind of the target's like 43.35. There is no stop. You have to, you know, if you bounce, you know, we turn into whatever we're doing now. You know, like an anti-jacks kind of thing. Up, we hit 4,400. All right, so there we go. There's my World's greatest dad, no. That's what I was gonna ring when Lex almost didn't show up to his own show. But anyway, like it's very difficult to like peel out or climb out, you know, when you have like a long gamma trade on a checks or anti-checks day. I think probably, you know, going short gamma when you're approaching a line in the sand, might be a good, but you know, that really happens. Like this today, what happened today is a rarity. It doesn't happen very often where number one, where anti-checks transitions to checks, but number two, when, not just that, but when, like a line in the sand breach on checks or anti-checks. That is not something that happens very often. And even though at 43.75 we held up for a while, so it gave you enough opportunity to get out if you're day trading. So short gamma on the line in the sand is probably a better bet as far as a winning trade for checks and anti-checks. You also like when you hit the target, you kind of like, oh, I could have won there. Yeah, so I guess it just depends on how you feel about that. We're probably going to do some testing on checks and anti-checks to see how often that target gets hit when it's declared, and how often the line of sand when it's declared. So we'll have all that out, probably for the we'll have that out for the white paper. Okay. That's going on. Yeah, I think that's the way to do it. City-owned too, as rare as it is, I would just put on a butterfly, you know, like depending on what time it is. Put a butterfly on, right there at that charm balance spot, and you know, you can even sell a profitable leg if it deviates too far from that target. But again, that happens 3% of the time. So, thank you, Jerry Rest. I appreciate it. You know, I think too, there's no amount of edge that can overcome bad risk management. I mean, short of going back in time and or going forward in time, like Back to the Future 2, and getting a financial, getting a Wall Street Journal almanac or whatever. Short of that, I mean, risk management, there's no edge that will overcome risk management issues. So that's always the first place to go. Can I show an example of Dragon Boys? What do you need an example of? Like how to trade a Bank of America?
Jason, can I jump in too for a second? He said yes, but can I jump in for a second? We're gonna start getting questions about the white paper, and I would say let's hold off.
Okay.
All right, cool, thanks.
If no one's made a talk about that yet.
I got something very special in the works. I don't want to save it for them, so it will be worth it. Promise.
So Jill, so let's just say, hypothetically, that we're in a Bank of America paradigm, and you know, 4380. You know, 4380 is the line in the sand, and 4425, right? So we do a iron copper, okay, at 40-cent credit. Now we look at the risk profile, right? Okay. So here's your iron condor. Probably not the greatest risk to return, but hey, that's what it is, right? Here's your iron condor. Now let's say we start getting close to breaching the 44.30 area, right? So here's the current price. We start getting close over here. Now, granted, yes, you're losing a ton of money, but that's because it's not going to go from 44.05 to 43.80 less than a minute. So, but
Okay, let's just say you're about to breach this area, all right? And block it at 40 cents. What I'm saying is right here, you kind of have to stop and think, like make a decision. Was the momentum extremely strong at this point? Like, if you're a dealer and this is your chance to make your bonus, which would be like over here, right? The dealer's bonus is between these goalposts. Would you defend your bonus, or would you start gamma hedging and making sure that you collect profits on your spread? Okay, and that is what this line in the sand is essentially. Okay, it is where the dealers have to make their decision on a Bank of America. So now this is where you make your decision. Okay, now when you hit here, if you think they'll probably defend, right? What I would do is I would drop this maybe like 15 points. Here, 44.25 will go down to 44.10 and then 44.15. Drop it there. And then, you know, squeeze it here. Remember the credit was a buck. The credit was like a buck 40 cents, right? And you take I dropped the wrong leg. I'm sorry. Hold on. Apologize. So we dropped this 15 points down to 43.60 and then 43.65. Okay. Now you have 15-cent credit instead of the 40-cent credit, so you're losing money at this point, right? And not just at 20 cents. Really, right now you're losing, you know, a good chunk of change. Again, it doesn't really drop immediately, but you want to get back that credit that you were going to lose. So you drop this spread as well, probably about 25. Okay. And now, like, you know, I know it's $2.45 because the price is actually right here, but that's how you can retain profitability if you think that they will defend. Now, let's say that they defend and it starts bouncing up. That's when you have to start paying attention to this strike. You don't want that huge run up to start making you lose money again. But if you but it will mitigate losses if they defend. Now, if they don't defend, it'll probably drop pretty quickly. You know, and it'll probably drop pretty much to your spot. About 10 points is about normal, I think. When the line in the sand is breached, about 10 to 15 points you get pretty quickly. And then from there, it's all gamma hedging. So you kind of have to manage a trade that I would probably get out myself. Like if I started seeing that line in the sand get close or breached, you know, I would either stay in or get out. I wouldn't, you know, get too crazy on that. The other choice too, if you don't want to try to squeeze, is close out this spread, close out the profit, right? So if we return back to what we had, this is of course if you determine that this is the right. This is if you determine that you think they will pass, right? You think they will defend this area. Just close out the winning trade. So you would go like this. And you would collect that debit. And then if you bounce, then you're getting your profits back pretty quickly. Because you're not receiving the drawback from the blowback from the profitable wing, right? Just a thought, I'm just, these are possible trade plans. You gotta kind of do what you're comfortable with, and you can see if you do drop immediately, it is a loss. So I mean, you gotta again return to risk. You gotta manage your risk well. Yeah. So that's what I would like. Just a couple of choices. Yeah, just kind of also figure it out. When you're trading. Did that help you, Dragon Boys? Any chances Volland Live could be made more affordable. So, I mean, to be honest with you, Volland Live takes a lot of processing power. I mean, it's the price kind of is how we are determining. It's that level. Like if it is unaffordable, day trading. I don't know how much capital you have for day trading. I mean, with that kind of pricing, it's what we need to meet our costs, and and if day trading, $1,000 is probably like for a sufficient amount of capital, $1,000 should be handled pretty quickly for day trading. But that's just my opinion. That's also why I don't day trade. I don't have $500,000 to throw around. Actually, we spent a lot of money on making volume. I feel like I should have at least 100K for life. Yeah, sure. I mean, part of the reason why day trading, but plus I don't know if I have like that attention. If I were to do this every day, I get tired of it pretty quickly. That's just my personality. You guys have special personalities for the reason to do this. It is. I mean, like I said, there's no amount of edge that can overcome that distance. I think it's time for another update. We almost hit 4410. But around like 3 o'clock is when, because it's charmed for every hour. Around 3 o'clock is when you should look at the charm and say like, okay, that's the accurate number for the rest of the day. When you get to like the half hour point, this bar here, this 4410 bar, it'll go up to like 4 or 5 billion just on this bar. But that's only like a half hour. You have to kind of come at it. But yeah, I think that's the option traders stuff like that. Which means that now it's just the hedgers. You do a 5-point butterfly now on 4410. See how it works. Risk managed, of course, no full ports. Like not even 1% of your capital should be put in. Like 0.5%, 0.7% is your capital. Oh, the treasury statement at 2 o'clock. Oh, 5 minutes. Is that significant? Is that going to be significant, or is it like what are they talking about? We got 20 minutes. Federal government surplus or deficit. Here, I'll ruin it for you. Deficit. Any recommendation for learning about hedging a portfolio? That is a really good question. I think first you have to determine where your risk is and what you want to hedge away from. So I mean, most of the time when people say hedging a portfolio, when people say hedging a portfolio, they're talking about a long only portfolio. They see SPX since 1929 go basically up in a straight line, and they need some kind of measure of buying puts or something. Personally, like one of our thoughts that I kind of use for clients and stuff, or like risk averse clients, is my dividend portfolio fund, where
you go long stock on dividend, like, solid dividend stock, like say Verizon, for example, and you buy a put debit spread, kind of like the JPM collar, and you sell a call, and you don't, the options usually price in the dividend, so you want to find a stock that, number one, has a reliable dividend, and number two, even has a chance to advance, like Verizon. They raise their dividends seemingly once a year. And so you do something like that, and this Eagle, because you're selling two versus buying one, if you place the strikes right, usually, you can kind of buy a 40, sell a 20 delta about 1 year out. And you get, that's quite a bit of, then it costs a bit, but you could sell like a 55, 60 call, or, right, like a 45, call and pay for it. So, and as long as you're selling more, it kind of neutralizes the dividend that's in your portfolio, or the dividends that are priced into those options. And then and then you collect the dividend and any capital gains if the stock goes up. And you're prevented from losing much if it goes down. When it comes to using Volland to determine where to hedge, I would, I would look at the Van or even the Vega, really Vanna, because that's where you see that flipping. And I would start to hedge when you think the aggregate Vanna will start collapsing to, like that 10 to 15 billion area. That'll probably be like right around here. So probably a good spot to hedge would be like the 4,000 range, 4,100 range if you are long only. But that's probably about where I'd hedge is when aggregate Vanna starts hitting about 10 billion, 5 billion, like that range. That's when things can start getting pretty volatile in the markets. So that's a good question. As far as like blanket learning where to hedge a portfolio, good question too. I'm not quite sure about that one. I think I'll get to the I'll leave that to the room. Like if you ask people in the sub room or the swing trading room, I'm sure there many people might have resources. I kind of vary my face and option volatility books. So all my stuff is like a little bit different, but yeah, I mean, when I hedge, I usually kind of find a strike that I feel comfortable with. Hedge on that. Like when I'm hedging my leads, I find like a strike, that I feel comfortable with, depending on, and it's kind of more of a feel thing. Oh, excuse me. Thank you guys. It's great. Really, yeah. I don't do that for the session. Yeah, well, the other thing too, V, is, I end up usually having like quite a few like calls and things to do at the end of the day. I mean, it's a lot easier said than done. My favorite books to learn about options. I want to know what level of option which I am. So JK, how do I determine that option traders are done? Because the wallet hasn't moved over the past couple hours. It moved at like that 12 o'clock, 12:15. You saw all the bars flipping, even though price hasn't done anything yet. That's kind of how I determine that option traders are done. And now it's dealers. The dealers take over, and that's why I say 44.10 is still it's still probably gonna
get hit at some point, but, oh, the 2 o'clock statement, what did the statement do? Nothing. Do anything? Nothing? Nothing. Drop 3 points. So Ian, if you're a beginner though, anything from Ewan Sinclair is pretty good. EUAN, SINCLAIR, I'll put that author here. It's good for if you're beginning options, it's like you need to get familiar with it. One thing that I'm impressed about is we saw a lot of hedging here, but most of the hedging has been sold calls. That's probably why vol got crushed so bad. More hedging sold calls than you would expect. Like almost equal. It's not here. I think we pretty deep voluntary. Okay, so you're familiar with one. So the trading volatility book that I've been using quite a bit talks a lot about Vanna in that book. Talks a lot about Mama too. Kind of a lot of volatility concepts because quite honestly, volatility drives the whole market. It's not even like after looking at a lot of the data, it's not even the market anymore. Sometimes I always thought, is the market driving volatility or is it the market volatility driving? So understanding volatility will help you understand the market on any time frame. But having vol is a big deal too because that gives you the dealer, that gives you the reason volatility drives the market is because of the market, because of their and because they are the reason you need vol because you need to see what they're going to like. Overall, by the way, again, I would not. So this 4,400 is green because it is crossed. It is likely a short call that is now, is now crossed. So I wouldn't read too much of the. Really, not even at 3 o'clock yet. A lot.
All right, Jason, you got two
But
more
it is still
questions.
liquid time.
Sorry to bug you. You got two
All right, 2 more questions and then I'll. All right. That's a good. That's good. That's a good one. Is it hard to under? It's NQ versus ES. Focus on SPX. There are days when NQ is stronger than ES. Not yet. Let me get future data and then I'll have my thoughts on it. The one thing I will say is that NQ does not even have the open interest that ES does. From a future standpoint. NDX, the index, is a Philadelphia exchange phalanx exchange product, and Susquehanna is the monopoly market maker for it. I guess they signed some kind of deal or something. So the spreads are wide, nobody trades it. I think the QQQ has very high volume of options. So I think that is probably the strongest OI, but I want to, before I say that definitively, I want to get the new data comes up and see what that. It's a hard understanding VIX to make use of it. If you mean the calculation of VIX, not really. I mean, you can on the CBOE website they have the calculation there. They have the formula there, and usually, you kind of have to know that nomenclature in order to get that formula right. But I mean, essentially, it is a weighted average of the midpoint 30-day implied volatilities across the whole option chain. So it's easy to manipulate VIX too, so it's kind of, it's not hard to understand, but it's kind of hard to, it's good for making assumptions. If you're assuming a certain level of implied volatility, VIX is not a bad place to go. So yeah, but it's not that hard to understand. You just have to think that far. Now I say that it's not hard for me to understand, but if you have questions, don't hesitate commenting. The implied volatility isn't below HV very often. What do you anticipate happening? Will it be expanding and we drop soon? That's my fear. I think, and especially if implied volatility expands with 32 billion in beta, it's going to get real ugly real fast. And so, am I anticipating that? The answer is, so one of two things will happen. Either implied volatility will expand fast, or historical volatility will come down. And if you look at the past 2 days, I have my doubts that historical volatility will come down substantially over the next couple of, it probably has to be like a week or two of basically under 1% moves in order for historical volatility to come down to a level where this is an appropriate level. So I say that it is very dangerous to be long right now, and definitely dangerous to be short vol. Do not be short vol. They probably better off creating some kind of aggregated data from large than you're right. Yeah, you're probably right. Yeah, Tesla is every day Tesla creates more options than all other equities. Well, almost all of them. Like, I mean, looking at the volumes, Tesla's volume yesterday was 2.98 million options traded on just that one stock. Nvidia was number 2 at 1.678. So almost half of Tesla was Nvidia. Apple was 1 million. So a third of Tesla is Apple. And then Disney and Mara, M-A-R-A, I guess that's the crypto people, they both traded 500,000 options, right? And then both of them were also pro-starting. So, and Apple was ex-dividend. So there's a couple of, the Disney was 472% of its average daily volume in options, and that was 500,000 options. So Tesla like almost matches the rest of equities. Kind of crazy.